Have you ever seen an investing app ad? Probably more than once and on more than one platform. Investing has never been more accessible. And with that, you'll often hear about two major types of investors: Forex traders and stock investors. But what exactly is Forex? What are stocks and how do they differ? More importantly, which one should you choose? In this video, I'll break it all down for you, the basics of both Forex and stock investing, their differences, and how to decide which one's right for you. Just a quick disclaimer. This is for informational and entertainment purposes only. We do not provide financial advice. Now that we've got that out of the way, let's dive in. Let's start with stocks. While the concept is simple, financial institutions often make it sound complex to keep you reliant on their expertise. But once you understand the fundamentals, you'll see that investing in stocks isn't as intimidating as it seems. At its core, a stock represents ownership in a company. When you buy a stock, you're purchasing a small piece of that company. In return, you gain partial ownership and, in some cases, a share of the company's profits. Let's use Frank's shoe company as an example. Imagine Frank starts a luxury shoe brand, coolest shoes around. But he needs $1 million to launch. He only has $100,000, so he decides to sell shares in his company. He convinces 9 investors, including you, to each contribute $100,000. Together, you raise the $1 million he needs, and each investor owns 10% of the company. A year later, business is booming, and the company is now worth $10 million. Since you own 10%, your stake is now worth $1 million. A 10 times or 10x return on your initial investment, or ROI as it is known. Of course, in reality, not all investments skyrocket like this. Some companies fail, stocks fluctuate, and patience is key. But the principle remains: you're investing in companies with long-term potential. There are different ways to invest in stocks, stock investment strategies, and these should be personal and suit your needs, lifestyle, and where in your journey you are. Buy and hold. Buying shares in a company and holding them for the long term. Banking on business growth. This is Warren Buffett's favorite strategy. Dividend investing. Choosing stocks that pay dividends. Providing passive income even if the stock price doesn't rise. Speculative trading. Buying stocks at a low price and selling them when they rise. Some traders hold stocks for days or even minutes, attempting to profit from short-term price movements. Forex, or foreign exchange trading, is about trading currencies instead of company shares. The goal is to predict how one currency will move against another, for example, USD to EUR. Let's say $1 equals 1.14 euros today. If you believe the euro will strengthen, you buy euros. If the exchange rate rises to 1.15, you can sell and make a profit. However, if the euro falls instead, you lose money. Forex trading happens in real time, meaning markets fluctuate every second. Unlike stocks, which rely on company performance and industry trends, Forex is influenced by economic events, interest rates, and geopolitical factors. Major differences between stocks and Forex include regulation and time investment. First, regulation. Stock markets are heavily regulated by institutions like the SEC or Securities and Exchange Commission, ensuring transparency and investor protection. Forex, however, is largely unregulated because it's an over-the-counter market. This makes it more accessible but also riskier. Be cautious of scams, especially from so-called Instagram traders promoting unrealistic profits. Forex trading is usually short-term. Traders might buy and sell within minutes, hours, or days. Stocks are often long-term investments, with investors holding onto them for years or even decades. Stock investments focus on long-term value growth, often supported by fundamental analysis. Forex is purely speculative, relying on short-term price fluctuations rather than long-term value. risk factor. Forex is highly volatile due to frequent price changes. Unexpected global events can cause major losses within minutes. Stocks tend to be more stable, with slower but steadier growth over time. Which one should you choose? The right choice depends on your investment goals, risk tolerance, and time commitment. If you prefer long-term stable growth, stocks are a better option. If you're comfortable with high-risk, fast-paced trading, Forex might appeal to you. At the end of the day, both have their pros and cons, and some investors even do both to diversify their portfolios. What are your thoughts? Drop a comment below. Thanks for hanging out. If you like this video, check out the one on your screen right now. It's packed with even more great investing insights. Click it, and I'll see you on the other side.